Most of you traders think you need like perfect executions to be profitable, but that's not true. I want to show you why my trading strategy stay profitable even when I was still making mistakes. Let me open my trading journal and you see what I'm talking about. Most beginners believe mistakes ruin a strategy. The real problem isn't mistakes, the real problem is having fragile strategies. Now, when starting out, mistakes are inevitable. Even the most disciplined traders fail with a fragile strategy. You need to have a strategy that is able to withstand human error because you're not a robot. So let me show you what a real strategy is. Okay, so this is the my chart, and I'm going to explain the strategy I use that has made me see results even while still making mistakes. So the name of the strategy is liquidity supply and demand. This is basically supply and demand, but with the addition of liquidity in it. As you can see, this is the live example of it. We have obviously we are following the trend. We're in a downtrend, so I'm looking for sales, right? I'm looking for supply zones. Now all I have after identifying the supply zone is to look for a liquidity. This is going to be a swing that failed to tap our zone before making a new low, breaking structure. Then in the same move it comes cleanly back to our zone and we enter simply off our confirmation entry, which in this case is a bearish candle. Now we don't want to see any candle closures inside our zone. We just want to see a wick. This just tells us that price doesn't want to stay in this area, and we just enter off that bearish candle, and our take profits in this case is going to be either at this low or any fixed risk to reward. Okay, so here's another example of the setup, the strategy on CHFJPY. Now in this case we have a supply zone, and in front of that supply zone we have a liquidity, a swing that failed to touch our supply zone and made a new low. This is what we call taking out its low. Liquidity taking out its low. So now after liquidity has swept taken out its low, it came up in a straight line, swept this liquidity pool over here and tapped into our supply zone. Now after seeing this, I wait for my entry confirmation, which is a bearish rejection. We don't want any closes inside our supply zone, and we simply enter off the bearish close, which in this case we did. You can see that we easily made 4R on this trade. I have a fixed risk reward on the I have a fixed risk to reward. I have a fixed risk to reward of 4R on the 5 minute time frame, and yeah, this would have hit. Okay, so this is another setup forming right here. So here we have a demand zone. I'm looking for buys because it broke above this high, so buys are on the table, and we have liquidity here almost touched our zone but broke its own high. So this is a valid level of liquidity that I want price to sweep. So all I want to see now is price to sweep this and see a bullish rejection candle. And I simply enter off that candle. Let's say stop loss like this, and I aim for 4R thereabouts. That's basically the entire strategy. That's how it works. It's that simple. Even with imperfect execution, this math still works in my favor. Now let me show you sorry for wasting too much time, but let me show you the cumulative of my forward testing journal. This was how much I was able to make as a beginner with this strategy. Like, mind you, I did not have any special guidance. I did not have any mentorship. All this was gotten from just constantly practicing by myself and YouTube videos. I'm going to show you the losing streaks that I've had. As you can see here, I had like up to 8 losing streaks here. 1 minus 1 minus 1%, and I documented every single one. Now let me see if I can open them for you. But like you see, this was up to 1 2 3 4 5 6 7 8 losses in a row. But you can see what happened after. I immediately had a 6% win on GBP USD and another 6% win on USD JPY. Let me open the charts right here. So, but yeah, this was the before. These are the losses I encountered. And now this was the win that made up for all the losses I had made. So you can see why this strategy is so powerful, because I have a robust strategy. This one was a 5 1 2 3 1 2 3 4 5 6. This was the 6 loss streak followed by a win, followed by another 3 losses, and I was still able to end in 61%. And this was forward testing over 3 months of data, because I started around July. Like, this gives you an idea that even when starting out as a complete beginner, I was still able to generate 61R. That is more than most professional hedge funds are making out there, and I was able to do that as a complete beginner using this strategy. As you can see, this was when I had a massive losing streak, but with the nature of the strategy, I was able to bounce back from it, and it's been pretty much upwards from there. When you're trading a strategy for the first time, the edge should be strong enough to account for human error, because you are the one trading it. You can't eliminate human error in trading, you can only minimize it. So your trading strategy should be able to account for this, and by minimizing it, this only improves your edge. So what I want you to do now is just to find the strategy that you believe works. I want you to backtest that strategy and only focus on that strategy. And feel free to make mistakes, but only on a demo account. Make all the mistakes you want and learn from that mistakes. If your strategy is still profitable after those mistakes you have made, after like 3 months to 6 months of forward testing data, then you can make your refinements and start using it on live markets. If you like this video, don't forget to like, share, subscribe. You guys should help me out. Help me out, please. Let's reach 1,000 subscribers before 2026 ends. Thank you guys. Catch you guys in the next video. Peace.